Hello, I'm Puneet Wadhwa, and today we have with us Neil Parikh of PPFAS. Hello, Neil, and welcome. Let me start by asking you, Neil, what's your broad outlook for the markets in 2023?
So actually, so 1 year or looking forward for 1 year, it's a little tough to predict what the market is going to be. But also the fact that Indian markets have run up more than say global markets, there could be a shorter term kind of a time correction, or those markets reach up to us. So we are being a little conservative right now. We're sitting on a little bit of cash right now. Again, valuations are not that cheap, so yeah, it's time to be a little careful.
Okay. Another thing that has impacted the entire mutual fund industry is the recent Sebi order on the capping of international exposure. And PPFAS is one of its largest fund that has about 28,000 crores in a flexi cap scheme that has exposure to international markets. How are you dealing with that?
Yes, it's not ideal. We would have loved the limits to be open so we could have run a strategy. But what has happened for us is that we were sitting around 20 before the caps came in. About 30%, 28 to 30% was in foreign equities. Now that has come down to about 16%. So that much has come down. But I'm hoping the caps will open up soon. I think when the economically, when we are a little more stable, when the rupee is stable, oil prices are stable, when things in the world are a little better. I think give it about 6 months time. I think we could open up then, and we can top up after that. So we're not overly concerned, but it's not ideal.
But then, Neil, that scheme has a major exposure to IT related stocks, especially those FANG stocks, which most of the experts are now saying that it is not time to actually stay away from them. How does it impact the investors per se? Then, how are you dealing with the investor skepticism and the nervousness around this entire thing?
So I think right now is a great time to buy these stocks. So if the limits are open, we will definitely be buyers of these stocks. Some of the stocks. I mean, again, I think we need to cannot take Nasdaq as a whole. I think there are mature tech companies like Google, Amazon, Microsoft, which actually are showing profitability, whereas there are new age tech companies which were just going on because of the low interest rates and funding was available. But those things are getting over. So that side is actually facing a lot of trouble, but the Googles and Amazons were actually pretty decently valued even before the fall. So they were at about 20, Google was about 28, 30 times earning, which has come down to teens and the 18, 19 times earning. So it actually makes a great buy. So we would be buyers if the limits would be open.
So, which actually will help you lower the acquisition cost, averaging basically. Then,
Yeah. Yeah. So if it was open, we would have probably seen, we would have been probably buyers, and it would have been down 30, 40%. This just forces us not to buy them, not to buy them in the last year or so. But yeah, hopefully, hoping that opens up soon and we could actually get into some of these now.
so as a strategy, do you think that 23 belongs to passive style of investing, or someone needs to be a little more aggressive in buying whatever they have to buy,
The foreign stocks?
foreign stocks as well as the Indian counterpart?
Yeah, so we are active investors, active managers. So we do our own research, and yeah, we buy that. We're not passively looking at anything.
Okay, so another concern for the markets right now is the latest COVID strain from China.
Yeah.
Can that be a joker in the pack and see markets correct?
Yes, I think uncertainties were there for the last 1 or 2 years. I think they will continue for the next 1 year. So the first question, how do we see the market? I think we could see a pretty volatile market going forward. Also, like I said, Indian markets were resilient. You could see us coming down a little bit, but that's anyone's guess. But like I said, we are being a little conservative right now.
So in terms of sectors, what's your tilt like right now?
So we are pretty positive on private sector banks. Again, the bigger names, the HDFC, ICICI, Axis. So we, in fact, during COVID, we had lowered the position in these stocks because there was a lot of uncertainty about what banking is going to go forward. But I think they've come out really well, and I think we've been buyers there. Again, we sold off some of our mid cap IT and converted that into large cap IT because the valuations were attractive, and going forward, I think over a 5-7 year period, these could do well. Again, we like fee based finance companies like exchanges or CDSL kind of companies, or CAMS kind of a company, where there's a monopoly duopoly kind of situation in some of these. So we've we've got into some of those recently.
Are there any contrarian bets?
Contrarian bets, again, one of our biggest contrarian bets was ITC, and that's one of our big
Correct.
position. Also, this is during the COVID
Yes.
times. Again, autos is something that we are we will like it. I mean, going forward, and yeah, like I said, if there were the tech stocks were available for us to buy, we would be contrarians and buying them right now.
How's the business coming along in general? I mean, we have seen PPFAS expand over the past 2 years
Yes.
in terms of branch network. What is the road ahead?
So road ahead, I think one of the things that the COVID has taught us is that, and that the whole narrative that time was that we won't need physical offices and everything will be online. I think that's a little far fetched. I think having branches or feet on the street is absolutely necessary, because the people to people kind of a business, here. So I think when we so obviously branch networks will increase for us, improve for us. At the same time, I think the branch, it should be like an Apple model, where the branches are pretty much there for education and to see the products, and then I think the fulfillment can be done in through fintechs or directly or through a distributor or online. So the digital capabilities need to be really good. So we're concentrating on the digital capabilities as well as branch expansion. So a phygital model kind of thing would be the right way to go about.
Thank you, Neil, for your time today. We hope to see you soon.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.